So we're here with another special guest today, Tanya Duffy from Howard Hanna, formerly Coach Realtors. And, Tanya is a seasoned professional that I've known for many years. And, I find her services a little bit more unique than most because she's had a lot of history with being an appraiser, also working for the town and the tax assessor's office. And I thought this would be a great opportunity to share a little bit about what she does and some of the services that she can provide. So Tanya,
hello.
Good to see you.
Thanks for having me.
You're welcome. So you've been in real estate for
many years.
So over 20 for sure.
Yeah,
right?
Yeah.
So back in the day, you used to moonlight as an appraiser in addition to being a realtor.
Yes.
Okay.
Yes. Actually, I had started the business as an appraiser and did the real estate on the side.
Okay.
Because my husband was doing it full time at that time. So I was helping him out. And I absolutely loved it. I never wanted to become a real estate agent. I loved the aspect of appraising homes. I've always been fascinated with real estate. Back in the crash with the 08, 09 and everything, they all decided to bring a middle person in.
The AMCs.
Exactly.
Appraisal management companies.
Yep.
Yes.
So they had to get paid. So the cut came from the appraiser's end, and
it just wasn't
financially feasible.
Right.
But I dabbled into it more for tax grievance purposes. I did appraisals for tax grievance purposes and for estates. And I had my own company for a while. And then I started looking into the real estate aspect of it. Just was getting too mundane and whatnot and wanted to branch out. And I've always had I always kept up with my real estate license. So I decided to go into that route.
Right. And obviously you said you were supporting Chuck, which is your husband and
yes.
and real estate partner. Which is also, there's an advantage there as well when you work as a team.
Oh, most definitely.
100%. So I think one of the advantages of working with you is because you do have that knowledge of an appraiser mindset. What's the difference between what a realtor does to do a CMA, a comparative market analysis, right?
Correct.
And what an appraiser does? Because I'm assuming that there's a difference there.
There is. It's two totally different hats to wear. One gets more in depth than the other. As a realtor, I'm looking for what is the first thing a buyer's going to notice. How can I make it better? How can I make it more appealing, more of that wow factor? Mm-hmm. Whereas an appraiser, I'm looking at, are all the outlet covers connected? Where is the CO detector?
Right.
So yeah, they're two completely different hats, however, all under one roof.
Right. So, but as far as establishing a value for a potential seller, how is that different? Because you're obviously looking at comps,
right?
And you're doing that similarly with as an appraiser, but more in depth. So, what's the difference there?
There's not much of a difference. However, I'm looking at the comps differently. It's imperative that it goes by school district. Mm-hmm. People on Long Island, they buy by school district. So if I have a subject property and there's no comps available, I would rather go outside the mile, mm-hmm. quotes, than go back in time. A lot of appraisers will go back in time if there's nothing available, but...
And what is that? Is it 6 months? Is it a year?
It's 6 months. Right. Usually it's 6 months. You don't like to go necessarily over a year. That's taboo because it's a different market at that point.
Time, especially now in this market.
Exactly. So right now, I would imagine that appraisers are doing actually 3 months.
Okay. I guess the reason why I'm asking you this is because I think that, there's always concern about, value, right? Because especially in today's market where everybody's going over ask, there's always that, what if? Is it going to appraise? And, there's always doubt. But, as an appraiser, and that's where I'm trying to understand, because if you're an appraiser or a realtor, then technically you should really be coming in with the same number.
Technically, you could. However, with this crazy market and inventory being so low, you have these buyers that are going above asking. Normally, the agent is listing the property correctly mm-hmm. based on the comps that she provided, but it's these buyers that are overbidding that You know what?
They don't have a choice.
Yeah, they don't have a choice.
They really
Exactly.
Right. I'm always telling clients, hey, you set a floor. If you're buying a house for 500,000, I wouldn't just waive the appraisal contingency. Say, okay, well, it has to at least appraise for, say, 475. You minimize your exposure.
Right.
Right. Because if you're waiving it entirely, if it does appraise for 425 or 450, now you have to figure out how to manage that.
Well, I'm also taking buyers out now that are desperately looking for houses, and then let's say they don't want to spend more than 600. Okay, fine. So we're not going to look at anything more than 575.
Right.
Giving them that leeway to overbid if they wanted to.
Moving forward from your appraiser days and doing real estate, you then moved over to the tax receiver's office at Smithtown.
Correct.
Okay. So, this is a topic that for me, as far as paying your taxes, how taxes are being calculated. Obviously people will pay their taxes in their mortgage. They pay them separately.
Correct.
There's star exemptions. There's a lot that goes into this. I'm assuming that it's similar in terms of the different towns in terms of how they operate.
Yeah, all townships have the tax assessor's office and the tax receiver's office. The tax receiver's office collects the tax.
Money. Oh,
yes, collects the money. It's actually the assessor's office that assesses the house. They also deal with exemptions, and they also deal with tax grievances.
Okay, so let's start with the tax assessor. So when they're establishing a tax, your property taxes, it's based off of a rate, correct, that they're using?
Mill rate.
Right.
And that changes every year. And that's why your taxes go up every single year. Taxes never go down. No. They always go up.
Unless you grieve them.
Unless you grieve them.
Right.
Exactly.
So it's that rate, and it's based off of the current value?
The assessed value.
The assessed value. Not what it's sold for or sold for?
Well, you can get reassessed after a sale. However, that's a lot of sales, a lot of manpower that the town has to put in. So a lot of houses do not get reassessed after they've been sold. It's only when you change, let's say, the classification of a house from a one-family house to a mother-daughter.
Right.
Or a two-family, which is very rare.
Right. But that's initiating that recalculation.
New assessment, exactly.
Right. So otherwise, really the only opportunity for your taxes to be adjusted is on you.
Correct.
Right. So then that gets into the tax grievance piece.
Correct.
All right. So let's talk about that a little bit, because I know there are certain services out there. I know, like, what is it? Mark Lewis, Tax Reduction Services is a company that I've used in the past. We have our good friend, Denise Ranke.
Denise Ranke.
Yes, Denise Ranke. We're calling on you, Denise Ranke.
Yeah.
I want to do a sit down with you and talk about tax grievance.
Yeah. She does that.
Yes.
Very well.
Yes. So an independent tax griever, has had a lot of success. Great realtor, good person. But so you could solicit, obviously, one of these services to help with that tax grievance process.
Right.
So,
now keep in mind, you can grieve your taxes from January 1st of every year until the second Tuesday in May.
Okay.
That's when they accept the grievance applications.
Now, but you can only grieve every year, or I thought there was like a...
You can grieve every year. I've had people, when I was appraising for them, to grieve them every year.
Is there like a limit to like how much it can be grieved as far as the amount? As a reduction, or it's just whatever's appropriate
It's based on the market.
Right.
It's based on the market because you have to provide comps in order to exactly.
So what is that? So what is typically an appraisal is required?
Correct. It's the application. You have to literally go back 2 years. Because the tax season starts December. I know this gets very confusing.
That's why you're here.
I know. The tax season actually starts December 1st of every year and goes until November 30th of the following year.
Right.
Your first payment would always be due by January 10th, your second by May 31st. You never want to be late for that May 31st payment because literally June 1st, not only is it an 11% penalty,
Yes.
you also have to pay your taxes out in Riverhead.
Oy.
And so does everybody else in Suffolk County.
Oh, yeah.
So they go by the postmark, which is good. But it's a big penalty. So you never want to be late for the May payment.
So Tanya is also also an investor. I mean, you've had many rental properties.
I still do.
Yeah, that's awesome. And again, and those properties, do you pay your taxes on your own?
I do. Yeah.
And that's your personal preference.
Correct.
Right. Because a lot of times, it's easier for people, I think, to have their taxes included in their mortgage.
They don't think about it.
You're right. You said it, you forget it.
Right.
Old infomercial. There's a convenience factor to it, but they say that you're giving, them a tax-free loan essentially, right? You'd rather hold on to your own money and
that's it.
Right?
Yeah, exactly. And not only that, but we send out a statement in February. You'd be shocked as to how many people don't read their tax bill. Mm-hmm. And to the realtors out there, check the website. There's a wealth of information on websites. And it's not just, it's at smithtownny.gov. It's babylonny.gov, so Brookhaven, every township. A wealth of information. You do not need to call the receiver or the assessor to get true taxes. Right. The exemptions that are available to some people, you don't even realize how many exemptions there actually are. That's a phone call to the assessor's office.
Talk to me about some of those exemptions. Obviously, and that leads me right into, I was going to ask you about the STAR, because the STAR changed. If back in the day, we used to get the ability to have that reduction and that STAR rate deduction as part of your mortgage payment. So if you got $1,000 off your $12,000 annual tax bill, we were only escrowing based on the $11,000.
Correct.
And then several years ago they changed it.
2014.
There you go. Several years ago they changed it. So regardless of whether you get the exemption or not, you're paying the true taxes. You have to qualify for the mortgage at the higher amount.
Correct.
And then obviously you'll get a refund at the end of the year. For that STAR exemption.
Well, STAR would be now anybody that's purchased a house from 2014 and on. Mm-hmm. STAR is now through the state.
Right.
You have to apply for it online, and the state mails you out the STAR rebate check. Now, whether or not you apply that towards your taxes, that's strictly up to you.
Sure.
So
it's a nice little bonus to get once. I kind of like it.
It is, and it's based on school district, to keep that in mind. It's not necessarily township.
Right.
It's based on school district. So.
What was it's $500,000, so you have to earn under $500,000 to be eligible for the STAR exemption?
It has to be your primary residence, right. And you have to make less than $500,000 a year.
Well, I'm definitely not earning $500,000 this year. So, right, so you have that, and then there's additional exemptions that you can get above and beyond.
Right, there's veterans exemptions, there's if you do improvements to your home, solar panels, there's a solar panel exemption. Ooh. So yeah, there's different types of exemptions, but give the assessor a call.
And then do you have to reapply for the STAR? I mean, let's say I apply for the STAR through the state, I get approved for it. Now, if I remember again too, they're not using your current income, they're using income from like 2 years previously, right?
Correct. And
look at me.
Yeah, look at you. I know. And like I said, it's through the state, so I'm not too sure, but I'm sure it says on the state website.
Because I'm wondering is if let's say I'm eligible for the STAR exemption, and then all of a sudden my income exceeds the limit, then I would assume I get dropped.
Yep.
And then I would have to go reapply again if my income came back.
No, actually, no. I don't think you'd have to reapply. They tap into that.
The IRS, and they're looking at
exactly.
your income, so you don't have to actually do anything.
No.
So what other you said the VA exemption. You mentioned solar. Any other ones off the top of your head that could be available for people?
Senior exemptions.
Firemen, right? Don't they get an exemption?
Firemen get exemptions. Volunteer firemen, but they know that through the firehouse.
Firehouse, right?
Yeah. And it's not a lot, but when you add all that stuff up, it could very well make a big difference.
Every little bit helps. Huh?
Exactly. But my suggestion would be to read your tax bill, find out what the town thinks your house is worth. In today's day and market, with the values of the houses going crazy, to grieve your taxes would be difficult because the values have gone up so much.
Right. Any other tips that you can give to a potential homeowner, a potential home buyer, I should say, that that they can look out for?
Oh, there's one thing. Are you familiar with the pro rata?
No, I think I do, but I'm not sure. I don't want to.
Okay.
Yeah.
A lot of times it's a jaw dropping thing. When a young couple buys a house and it's an elderly person's house, that elderly person has exemptions.
Right.
Like I said before, tax season runs December 1st every year until November 30th. Let's say you close in September. Well, September 1st, you're given a set of keys. Now, you're living under that elderly person's exemptions
For the rest of that year.
until November 30th.
Right.
Okay. And it probably, by the time it actually gets recorded with the new person's name on it out in Riverhead, and by the time the assessor finds out that this is a new owner and that the exemptions come off, on the following tax bill, you will have a line that says pro rata. And what that pro rata is a repayment of those days that you benefited from the previous owner's exemptions. Yeah.
I thought you got a pass.
No pass.
No pass.
So literally,
You're getting a bill.
it's going on your tax bill, and it's jaw dropping. Sometimes,
Right, depending on how
depending
severely,
on when you close on the house and this, that, and the other.
they're always going to get you.
Yeah.
One way or the
But
other.
I mean, like, especially when their taxes are getting paid through the mortgage, all of a sudden they get a notification from
Right.
the bank stating that
An escrow analysis, you're short.
and now your new mortgage payment is now $800 more.
Right. All right. So, Tanya, your experience, your history with, again, being an appraiser, having experience in the tax receiver's office, and also being an investor and owning rental properties. I mean, you really do have all the bases covered, and again, I think that's what makes you stand out in my eyes, and obviously Chuck is a great person as well. So you definitely have my endorsement for anybody that's looking for real estate needs. How does somebody reach out to you? How do they connect with you?
Through my website at tduffy@coachrealtors.com.
And your phone number?
My cell is area code 631-682-9014.
Okay, awesome. All right, very good. Tanya, thank you so much.
Thank you.
You're welcome.